What's going on, Chris here? So we're just going to take a quick look at the S&P 500, try to go through it as quick as possible, have an objective, based on price and different time frames, outlook of what this can happen, and the case for both sides. Right now, the market is waiting on pretty much three events. One is unemployment claims tomorrow. Uh, Another one is GDP next week, and I think unemployment claims again, and then the quarterly close. So, trying to figure out what's going to happen, we just don't know. And there is a case for a parabolic run to equal all-time highs, or a reversal here to begin a swing down and then a Santa rally later in the year of 2023, and then a I guess a correction into from the beginning of 2024 all the way down to maybe possibly 3,300 on the S&P 500. So this is like the AI hype. We're getting crazy forecasts, and we just don't know when it's going to stop. That's like a far target forecast from the math, from Candlebox Law and Microsoft. And then these things are causing the .com like euphoria in the markets. And Nvidia target 483, Microsoft target 396, and then at the same time, we got all these fear and greed indicators, whether it's global PMI, vol of vol versus volume, safe haven demand, junk volatility, equity put call ratio just being weird, market breadth being weird, market strength, momentum, and fear and greed. They're all just extreme greed. It's just not the most healthy. It's very like .com bust like. RSI wise, we're overbought on the strength indicator on the S&P 500 and tech. With Dow and Bitcoin, we're in the middle. But it's the middle is basically a possible reversal point. S&P 500, we're in the no man's land of the no man's land, and the point of this is basically to show that we're in the middle of the middle. So this is the big one. We're in the middle of it, and then this is kind of like a inception, smaller version inside the big version, and we're pretty much in the middle of it. So I guess you could call that balance, like no man's land of the no man's land. But we're neither at resistance and we're neither at support, and that's why the market's gone so slow. And where it's waiting for economic news like unemployment claims or GDP or the quarterly close before it can like decide where it's going to go. But in terms of like deciding on a bias, it's too early, and you just don't short into support and you don't long into resistance, and we're at neither. So it doesn't make sense to do either. It does make sense to do like a scalp, which is you long at the low, and we got this 3-day low, this previous day low, and previous weekly low, to long into the weekly resistance would be a good play, and I'm considering it just because I got duped into wanting to short Bitcoin and lost $100, but I can quickly get that back, no problem. One trade. Just gotta go slow. I don't have any time frame. No one's pushing me to make trades, so why try to lose money in uncertain times? But I would like to long here and then short in resistance. That's kind of just the overall play I would like to do. But the thing is, like, it's very uncertain. So S&P 500, looking at the oscillator, this is what gives me the confidence to short, which is this time frame. We're really on the 4-hour. We're really close to possibly curling up. But at the same time, on the 3-day time frame, we're really close to curling down. That's where this light blue would cross over on the, makeshift MACD indicator on the 3-day. So, like, it would show divergence, moving average divergence. But, and that's kind of where it's confusing. Like, we're close to a reversal, but we're also close to a parabolic run. And that this is a good representation of the confusion, which is, hey, we're overbought and we're getting some divergence to short, but it's not like confirmed yet. It's too early. And then the same is for the inverse, which is like, hey, we got this momentum and we could reverse to the upside, but it's not confirmed yet. And it's because it's the market's like imbalance and it's waiting for economic news. The point of this view was to show we have a 12-hour magnet breaker, which is 4016.7. And I put it here on the weekly, 4016.7. And if we went down there was a chance we could break the weekly order block of the bulls. And that would be really bad for the bulls. It would just pretty much confirm that it broke the bulls. But that hasn't happened yet. So on the high time frame, on the weekly and the 3-day, the bulls are intact. And that gives support to the case for a parabolic bull run. It's currently still a possible event. 12-hour breaker, what would be healthy for the market would be for it to come back to the 12-hour breaker and then bounce off of there and then make a new higher high. But what would be really unhealthy is if it just kept going up and .com style bust whenever that happens. This is the 4-hour showing that it broke bearishly, but it's really weak, and it's pretty much something you don't want to touch. It's a trap, and it's just pointing that the market's in balance right now. This is the 1-hour. I usually trade off the 30-minute breaker, and I'm considering going long. It makes the most sense in terms of the smaller time frames, and it's not you're longing at support. You don't short it into support, and then if I were to go short, I want it to be a little higher. And then this is the math forecast. It is saying to go into the direction of the short side. Short direction, unknown power or magnitude to the downside, or momentum. And the institutions it's pretty much the same thing, but my guess is that the institutions are going to push it into balance, and it's going to just be confusing, super confusing, to where we just go nowhere for months. I don't know. I will get really excited to go bullish when this crosses over the green line, but right now we're close to the red side. So the question is, like, did it finish accumulate? And then the institutions, are they done accumulating short, or are is this a beginning to pick the long side? And I just don't feel comfortable shorting at the current levels. I would need to see the market go into resistance. So it's pretty much a really bad pitch. There's no fat pitch here to swing at as a batter. It's just terrible pitches. And then this is an oscillator, momentum oscillator, showing the daily and weekly. And this weekly, it's this green line and black line are starting to pinch. And that's when they start to connect. It's a sign of just a lot of volatility. And in that volatility, we could see a parabolic move to the upside. And if it were to pick up the price and just keep at the highs here, we could pinch on the daily as well. Like the weekly and the daily pinch, it's a lot. It's a lot of momentum. This is the time frames I usually use it for, which is the 12-hour and 8-hour, and I use the yellow band when they both signal for a possible reversal. But the problem is, both of these cases are possible, which is a parabolic run up or a possible reversal. It's just too early to tell. This is the forecast model I favor. Candlebox law is saying we're going to have two pretty much peaks, a double top, parabolic run scenario. I like this is robot charting robot, the charting bot, and he sees a reversal here. We would hit our 40-16 naked breaker on here, and then run up here for a what's it called? a puke into 2024, which makes the most sense to me, just because of like the inverted yield curve, the the resilient economy still holding, and like a Santa rally. It makes the most sense to me. Cross asset correlation, U.S. dollar, we're at support currently, so it's for the case for reversal. U.S. dollar on the 12-hour. If we break to the upside here, we're in support, and if we break the the bears here, we would go bullish on the dollar, but it hasn't happened yet, so it's bearish currently on the 12-hour. So this is the one I would watch, the 12-hour and the dollar, and the 12-hour and the euro. This is the euro. We're bullish weekly and 3-day, but we're into resistance, and it's showing a very similar pattern to what we're seeing in the SP 500. Confusion, and we're just at a crossing point of either reverting or parabolic run, and that was just the main point of showing these cross asset classes. They're acknowledging that we're at this crossroads and it's not decided yet. The 12-hour on the euro, I would look for a breakdown to really confirm, like, hey, we're reversing. But right now, it hasn't reverted yet. It hasn't reverted on the 12-hour and the dollar, so it's still bearish on the dollar. And then the euro, it's still bullish on the euro. So we expect more upside. That's kind of, so if I were to take a trade, the next trade, it wouldn't be like a fat pitch, but it would be the next best thing, which is like I would play the range on a scalper time frame, which is that's weekly high from the weekly low. Scalp that range, and then put on a runner for the parabolic move. And then Japanese yen, no reversal. VIX, no reversal yet. And that's pretty much it. We're waiting for a break on the 12-hour for like a true reversal. But this is kind of what I would say is the condition of the market right now.